Hey, Kevin and Tiffany here talking about something that might impact your business. Today we're going to speak about tightening lending restrictions, right?
That's fair to say.
You want to take it away, Tiffany?
Sure. There's been several reports here lately about banks tightening their lending standards, being stricter in their lending standards. So that means they're being a little more conservative in who they lend money to. So, what difference does that make for a business? Is an excellent question, if I might say so myself. Is that a lot of businesses rely on banks for lending, and so what can they do to if they're suffering? So, what can banks do?
Hey, we're doing this one take. This is.
What can banks do if they're suffering from this new stricter lending practices from a bank? So, what difference does that make? I'm asking lots of questions right now.
Yes, I'm inquisitive.
Okay, yes, am I apparently.
Tell us about
it. So, lots of businesses, small businesses in particular, depend on financing for their business cash flows. So it could be that their small business is seasonal, and so they a fireworks stand, for example. Okay. So there's certain times of the year where we know we're going to make pretty much all of our revenue. There's July 4th. I see Christmas, New Year's, that time
Just
frame.
A handful of days.
That's right. And so those businesses, they receive all of their revenue in certain periods of the year. So it may be that they rely on financing activities throughout the rest of the year, and whether it's a bank or other sources of financing, to keep the cash flow flowing so they can store their inventory, for instance.
So it could be purchasing supplies.
Sure. They're still incurring some costs even throughout the year, whether that's just to house their inventory or, like you said, to purchase to build up their inventory to be prepared for those times of the year. And so they might rely on financing throughout the year when their cash is not flowing from operations.
Okay.
So what does that have to do with anything? So for a business,
let's take it to the board.
So for a business, we'll have our lovely business here, our home business.
That's
It's a lovely home business.
Business.
We're going to call this a home business, or it could just be any business for that matter.
Oh man.
So a business, we'll give it a little, just for fun. Okay, so the business, because it's winter time.
Your business has hair?
It's on fire. Oh, goodness.
It's a fireplace. Okay. She's an accountant.
I'm not an artist. Okay, so businesses have three sources of cash flows. So the main source of cash flows for a business, ideally, is through operating activities. So they have money coming into their business via operating activities. So that is the goods and services that business produces and sells. Okay. So of course, for every income, there's also some outflow. Of course. So we do have some money going out related to those operating activities as well.
Okay. So we can get this stuff to the clients or customers so that they can get us money.
So that's the expenses.
Okay.
That could be the cost of owning this and operating this home business.
Firewood.
That's absolutely coal, whatever you're burning. Because you wouldn't want to do that in your household. But that's right. Firewood in this example. This is great.
What's some more?
That's the expenses to produce your goods and services. So we also have income coming from investing activities. So those are the investments that your business has made into real estate, into the stock market, into other ventures, other businesses. So there's also, of course, an outflow for that. That's the money coming out of your business and into these investing activities.
Okay, so the money's coming out of the business here, and
Into
hopefully you're
the
getting hopefully royalties and dividends.
Yes, royalties, right? Income
dividends,
from those investments, income of some sort.
That was the word.
And then, of course, we have cash flows coming in from financing activities, and that's really what we're talking about today.
Focusing here
is the financing activities, and then most of those financing activities require repayment. So we do have
interest.
Money.
Usually they want interest, right?
They do usually want. The thing about financing activities that make it not the ideal source of cash flows is typically you're not going to receive less money than you have to repay, right?
Gotcha. I understand that.
Yes. Anyone
what if they
who
call
has
themselves
a loan,
angels? What if they call themselves angels?
Then they're maybe coming into you without any proven track record. That's where those guys come in, and they say, "I just believe in you, and also I believe in your business."
So it doesn't mean that they just want me to repay them with a thank you. That's not what that means.
No. Let's be honest.
Okay.
Now they're usually coming into a business and say, "Hey, I believe in you. I believe in your business, even though maybe you don't have any revenue yet.
Okay.
So I'm going to
faith in you,
give you some money to invest into your company, give you that cash flow, but I'm expecting a return on my investment." A return of my investment and also a return on my investment.
Okay.
So I expect to get my money back plus some.
Excellent.
And that's I mean, if we look at the investing activities, we're paying into these investments and we're expecting to get our money back plus some, right? So the balance though for operating activities, this is where we really want to streamline our business here. So we want a majority of our cash flow to come from operating activities.
Should I draw a line like that? No?
Would you, if you'd like to?
We're going to keep some of this money in the business, right? In the account, or does that?
Well, ideally, we have more coming into the business that allows us to maybe flow out to more investing opportunities.
Oh, okay. I see.
Sure, that's the ideal here. Now we will of course have money coming into the business from operating activities as we sell our goods and services. We want to minimize our operating expenses here, minimize the cost of producing those goods and services. Now that is in order to make this number smaller, we can do that by analyzing our income statements. That's where those come in handy.
So this is where the income statement comes
It does, to identify what expenses we have, what expenses are going into producing the goods and services that we are selling, and how can we minimize those? That might be getting competitive pricing from other vendors. It could be streamlining the processes. We could find more efficient and less expensive ways of doing things.
So even building another manufacturing facility, for instance, if you needed that, would that be considered this?
Well, the operating of that manufacturing, now the actual
what about
purchase
building
of
an
it
asset?
here,
Right,
that would be a more investing activities.
Adding on to the business, the house and stuff. That's part of those activities.
Sure, that's additional assets.
You wouldn't consider that investing?
Well,
in your business,
where building the assets themselves would be an investment. But the operation of those assets would be expenses.
Okay.
Does that make sense?
You could show me on these different sheets. Aren't you gonna show us a?
Yes. We'll look at the individual.
Maybe,
Sure, this is the cash flow statement. I mean, in pictures.
Oh, that's what this is.
Of course, that's absolutely
cash
it.
flow.
That is it. I don't think I mentioned that. Thank you. So this is the cash flow statement. So we have money coming into the company. Cash flowing in, and then cash flowing out. So let's summarize what this has to do. Why are we talking about all these activities?
With a fresh board, or leave it up?
Let's leave it out.
Okay.
So I can maybe talk through the lovely pictures we have drawn here.
Yes.
So banks tightening lending standards. Our source of financing may not be available to us anymore, at least not to the volume that we are used to if we're using traditional sources like a bank. And so if this is getting smaller, then we need cash flow coming from other activities. And we need more of a cash flow in this side of the board and less here. This may automatically be less. which actually might work for the good of our business. If we're having less dependence on financing activities, which is probably the most costly of these, because that number down here in very, much 99.9% of instances that I can think of, financing activities, this number here is always going to be bigger than that number.
Okay.
So where do we need to focus our attention?
Whereas
as
here
a
you could be
owner?
making profit, which could make this, you could make this
Sure.
number larger than this one.
You got it. You got it. That's
Dividends
exactly
could be
right.
making this number larger than this one, but yeah, but here this one is always going to be okay. So you want to give us a concise
Absolutely
how it applies to them in about
absolutely. So
15 seconds?
That you know me, I can make it as long as possible.
Oh.
And so 15 seconds. Banks are tightening lending standards. So our traditional sources of financing may be drying up. So where can we put our focus? Our focus needs to be on cash flows from other sources. And those sources include our operating activities and our investing activities. And this might actually be the boost that small businesses need to be less reliant on financing activities, which will always cost us more than it makes us. It may help smooth out our cash flows, but these financing activities are always going to cost more than we receive from the financing activities. So we need to focus our attention on strategic investments.
So you're saying, Tiffany, that we can use these restrictions
as the catalyst
to more creativity,
absolutely,
more innovation,
yes,
more
yes.
ingenuity.
Do it.
And so we can increase our earnings in these two spots, right? Okay, so being smart with our investments, wise with our investments, and figuring out new ways to develop products that could potentially, well, it would hopefully increase our revenue, right? Mm-hmm. And if we have
with fewer expenses.
So if we already have like an ecosystem of products. So if we were a car manufacturer, putting in like insurance, tacking insurance or financing with that. For instance, you already have the vehicles produced. You're just adding extra sources of revenue that don't cost your company as much as manufacturing whole new vehicles, things like that. Sure. Just think about what you have with your business, another product that you could make that could complement or supplement your income on the backs of something that you already have.
And that was an excellent example, because for, say, a car dealership, they're going to sell one vehicle to most customers. Most customers come in and either don't buy a vehicle or they buy one vehicle. I'm sure maybe there's some, you could probably think of some examples where they would buy more than one. But more often than not, your typical consumer, your typical consumer is going to come in and buy one vehicle or no vehicles. So if you're selling them one vehicle, you're not going to sell them any more of your inventory, more likely than not. So being creative about what additional products and services that your company can offer by looking at your customer base and say, what other things are they asking for?
Do they have cash?
Yes.
So that is just one specific example, but you're going to have to be creative, or let us help you be creative on figuring out what you might be able to piggyback on your existing your business ecosystem is what I've read about.
Absolutely. Being creative and where from an operating standpoint can I receive more revenue? From an operating standpoint, can I reduce my expenses? And then from investing as well, being strategic and wise in those investments. What investments are actually going to pay off for my business in the long run? So being able to analyze what opportunities are available to us and do that risk-benefit analysis to determine which ones are right for our business and are right for our business today, so that we can be more reliant on investing activities and operating activities and less reliant on financing activities.
If this is stuff you really don't like thinking about, or you just want some help with it, reach out to us. www.yourconsultingllc.com. And there's other ways. We're going to have a link below the video. Have a good day. Be blessed.